All right, AJT Jungle, this is the next part of our price action and technical analysis program. I needed to go back and revisit this because several of you understand and several of you don't. So I need to get us all on the same page. And some of you are asking questions that um, some of you are asking questions that don't really, they pertain to options, but they don't really pertain to what we do and what we use it for. If you're not trading options. So we're going to get into that today. So option flow data has been described as the most underutilized trading tool in the market. As we all know, good data can give us an edge over other traders. So in this module, I'm going to discuss what option flow is, where to find it, and how I use its data to help me make consistent profits. Now, there's going to be a shift in this as well, because I do need to change the narrative on this. I do need to change the narrative on this, so that there's no confusion going forward. Okay, that's the main thing. All right, so option flow refers to the tracking of option trading volume and activity to predict future stock movements. So obviously even though we're not trading options, we're using the data to help us in our stock trading. Because by understanding option flow, traders can gain insights into institutional buying. That's where the money is. That's who moves the market. Right? That's who moves the market. Institutional traders move the market, not us. Unless we can create a perfect storm like happened when the GME deal. Those were hundreds of thousands of retail traders getting together, overpowering institutional traders. I don't think you'll ever see that again. I think that was a one-time, one-off type deal. But as a general rule, I'm looking for where the big guys placing their bets. That's what I want to see. Where's the big guys? Where are the big guys placing their bets? Okay, so option flow provides real-time insights, making it easier for traders to identify potential opportunities and establish their true risk. Okay, so we look at option flow really both ways. It helps us establish our risk because it tells us what the profit potential is. How likely is a stock to move in one direction versus the other? We can determine that through option flow. We'll look at that here in a minute. But it can help you find opportunities. Options are a derivative of the stock. Okay, you can gain valuable insight into where the stock's price might be headed. And we'll look at this again. We'll look at an example again. But you really, really have to get into option flow. Now, it's not hard. If you eliminate the stuff that doesn't pertain to equities trading, if you eliminate the stuff that only refers to option trading, it's really, really simple. And that's what I want to get through to you guys. But it's really the main reason why we should be using option flow. Whether trading stocks or options, it is important to understand the way in which option order flow can impact the stock market. Okay, many equity traders now, like me and you other independent retail traders, are using option flow to help them make trading decisions. Now, some are using it more intensely than we are. Option flow basically is time and sales for options. It's similar to the time and sales tape that we see for stocks. Now, the argument has always been with level 2. Level 2 is not showing orders that have been executed. It's only showing orders that are pending. So people can put orders out there to get people to understand or to think a certain way. Then all of a sudden the orders disappear, and there's no telling what you're left holding. So I always like to look at what's actually processing, what's actually going through. That's going to tell the true story. And even then, that's not 100%, but it's a hell of a lot more than
NDIA media.
Using
I
gotta
18.5%. Michael Delta India.
gotta
Alpha,
turn this
NDIA.
man down. But it's foolproof to a certain extent. It is foolproof. I don't know why this thing is acting up, man. So, by analyzing the volume, open interest, and price of options, traders can gauge market sentiment and predict potential price movement in underlying stocks. So, when we're using option order flow, right, we are using real-time data. Okay, we're using real-time data to help us. It's price action. It's the action of the price in the options. Yeah, even with because Bookmap or Bookmark, what is it? Bookmark. It's not showing you the orders that have processed. It's only showing you orders that are pending, that are sitting out there, waiting to get hit at a certain price. Why would big money put their orders out so you can see it? So that you can have the advantage. Why would they do that? So you're only going to see it after they've done it. That's the key. But here's a question I get. But Ed, FinViz has the option chain. What's the difference? To be honest with you, most people will tell you there's no difference. It's the same. Option chain and option flow is the same. Just like a lot of people will tell you a stock screener and a stock scanner is the same. But in my mind, they're two different things. When you're looking at option flow, we're looking at the live data feed from the options market. Option chain to me is a chart based on live data. So you're not seeing it update real time. You're just seeing the chart of what's going on. Okay, I believe FinViz will update every 15 minutes. So you're not getting real time live data feed like you would what I consider option flow. And that's why you're paying all that extra money. But it does do other things. It shows you if you get unusual option activity, like all of a sudden things just start getting bought up. Okay, and we're seeing unusual options activity. That could, pinpoint a potential trade somewhere. So, or a potential trade opportunity. So that's why those scanners, if you're an ambulance chaser, yeah, the option flow scanner is beautiful. I mean, it's beautiful. And I used to do that. But I quit when I realized I'm really not making that much more money. Actually, it's costing me more than if I just stick to what I do in the morning and then, go to earnings and I'm in a better position. I'm in a better shape. So, that's why I'm okay with the option chain and based on the live data charts. Okay, so what an option chain tells you, this is the basic information that we as equities traders that are using option data, these are the things that we need to focus on. Okay, if we start branching out and trying to understand everything about options and the option chart or the option chain or whatever, all we're going to do is get confused because some of those only pertains if you're trading options. So basically, we're just looking at the price action from that option flow. Okay, so option contracts allow investors or traders to buy or sell a security at a preset price. Okay, so option traders are basically speculating. These are the guys that are speculating the market. So if they're speculating that a stock is going to go up to a certain price in a week, then, it'll allow them to use that information. And that's how options traders make money. That's why I don't like options, because I don't really like speculation. Now, some people day trade options that's based on intraday charts, which is less speculative. Now, even though me trading stocks it can be considered speculative because we're predicting that the stock's going to go up or down based on the chart and the data and everything that we have. I mean, we do have that, okay? But it's a lot less risky in my opinion. But that's just my humble opinion. So that's why I stick to stocks. So options derive their value from the underlying security or stock, which is why they're considered derivatives. Now, not every stock on the stock market has options. Not every stock does. The ones that I want to trade, they're going to have options. I'm not going to look to trade a stock that doesn't have options, because that tells me that stock may be a little speculative. And I don't want to trade those. So when we say that options are derivative of the actual stock, that means the option is getting their price from, or their value from, the stock. So we also look at the expiration date, and we really focus on the short-term expiration dates. Okay, that's what we focus on. Our short-term expiration dates. For us, it's gonna be the end of the week. For example, you could buy a call option on a stock, and this is what I mean by speculation. On a stock expiring in April, and then another expiring in July. So you can speculate that the price is going to be up $100 in July. And then, hold on one second. Well, I was trying to catch this before. I'm going ahead and closing these out because the bottom's falling out. I don't think they're going back up. All right. Sorry about the diversion here, or not diversion. Wow, that's really the wrong word. But okay, options with less than 30 days to their expiration date will start losing value quickly as there's less time to execute them. So the ones that are expiring, weeklies, I'm looking at them to hit these big targets earlier in the week versus later in the week, because you can make more money on it. Okay, that's basically how I'm looking at it. So I'm looking at it moving to these prices relatively quickly, versus taking a long time to get there. Okay, so the way we look at the columns, and we're going to look at this in a minute. We've got strike price, the symbol, the last price change, bid, ask, volume, and open interest. Okay, these are the things that we're looking. There's some things that we don't care about. We don't care about the strike price or the last price or the change. We're not looking at any of that. Okay, none of that stuff matters. We're basically looking at the volume and open interest, obviously the symbol. But that's all we really care about at that point, because again, we're day trading, and we're day trading equities. Okay, while the volume column shows how many options traded in a particular day, the open interest column shows how many options are outstanding. Again, these are not people that have orders out. They've already bought their option contracts. They just haven't closed them yet. And so that you're looking at is open interest. And that is key. So open interest is a number of options that exist for a stock and include options that were opened in days prior. So everything we see today on the chart we're going to look at is not just what executed today. This is what's executed on this particular option contracts that expire at the end of the week throughout the last several days. Okay, so a high number of open interest means that traders are interested in that stock for that price and expiration date. Okay, so you get that. This is why I looked at these stocks that had the most volume, but more importantly, the most open interest still sitting. And that tells me that there are a lot of people, big money is interested in that price. And if I don't see a whole lot, betting opposite, then I'm going to feel pretty good about it. Now, again, open interest is important because we want to see liquidity, meaning there's enough demand for that option so that they can easily enter and exit a position. But as we all know, high open interest doesn't necessarily mean that a stock is going to move to that price. There could be, somebody coming in who doesn't want that to happen, who has enough clout or can gather enough people together to pull the price the other way. But when you see high open interest, that means there is a good chance, a lot better chance than not, that it will get to that price. All right, so that's why a lot of times you see me put price targets on these prices. It only makes sense, right? If you see a bunch of open interest and then afterwards you see hardly anything, more than likely the stock's going to try to get to that price and then come on back. Or it may get close. You just have to be ready. Alright, so bottom line, knowing how to read option chains is an integral skill to master because it can help you make better trading decisions and come out on the right side. And also, you don't want to overcomplicate it. Okay, we don't want to overcomplicate this thing. Alright, so let's take a look at the Meta platform here. Okay, so this is the one I use. I've shared this with you many times. It's FinViz. FinViz started giving out option chain data, and I didn't need a live feed option flow scanner. So this is perfect. Okay, perfect. So what was I looking at on Meta this morning? Okay, Meta opened up. See, what did it open at? It didn't say. Let's see, Meta opened at right at $4.99. Okay, so up in here. And obviously a lot of these were already open. A lot of these were already open. But, and a lot of this is already closed since the last time I looked at this. At one point we had like 10,000 shares in open interest at 510. We didn't even get to 510 yet. This is why my target was 510. We haven't gotten there yet. And look, there's 3,400 contracts open at 515, 32 at 520. Look at, I mean, there's big time here, but look at 500. Look at how many executed already at 500. Then we're starting to make the move back up. So we're pretty well hedged on both sides. We're pretty well hedged on both sides. I still feel that we would get 510 before we started to turn back around and go back. Still feel like that. All right, so again, this is the expiration date, which expires Friday. We can change this and look to see, okay, what does it look like for the options expiring next Friday? So I will do this if I'm looking to hold overnight. But just to give me an idea, nobody's really heavily vested in this beyond this week. So this is where the money is. So I focus on options expiring this week. And again, we're not looking at the strike price, the percent change on the bid ask. None of that stuff matters. All right. I'd say none of this stuff matters. Because we're not trading options. If we were trading options, this would matter. We're trading stocks. This is what matters to us. This is what matters. The volume telling us how many has actually been closed out, how many contracts have been closed out, how many are still open, and at what price. I'm sorry. I know my backwards ass talking is confusing you. I know that. Okay, we're looking at the stock strike price. Like this right here is the information we care about. The stock strike price. And then if we're looking on the put side, again, this is the only information that we care about on the put side. This, no. Who cares? Unless you're trading options. Okay? Unless you're trading options, okay? Unless you're trading options, this is all we care about. So are we clear on that point? Is everything clear now? No, this is not big kiss, big hug, big kiss, big hug. No, that's not what this is. This is X means no, O means yes. X means O, O means yes. So I hope any of you that may have been confused in the past and wonder why, I don't talk about this part of it, the percent change or anything, these prices, I don't really care about it. I'm not trading options, so I don't care. I'm trading the stocks based on the stock price. So I'm looking at the stock strike price, not the option strike price. All right, so if we got that, we're done for the day. If everybody's got that, we're done for the day, and we can start moving forward. Oh boy. So we're gonna stop this. I'm gonna